Hello lovely people! Welcome to video 2 of this personal finance video series. This episode I'm looking to bring a little more oomph, and by oomph I mean coffee. This video is unofficially sponsored by Trader Joe's Organic Fair Trade Sumatra Blend Coffee. Good stuff. Today I'm going to try to keep it shorter, and this will be focused on just one thing. I'm about to uncover a vital and yet seldom spoken truth about the stock market. No predictions here, just facts. If you're in a big hurry, you can access a version of this video that's half as long by checking on the settings button below and selecting 2x speed. Watch me talk twice as fast. So here we go. It's true that there's nothing quite like the stock market for building long-term wealth. But the other truth is that while the U.S. over the past 40 years has enjoyed an unprecedented stock market bull run, when you zoom out further, you also see long periods of down markets measured not in years but in decades. For example, after the Panic of 1929, followed by the Great Depression, the Dow Jones Industrial Average didn't regain its 1929 highs until the late 1950s, 30 years later, yeah. Similarly, there was a high in the mid-1960s following the post-World War II baby boom. But after that, the Dow Jones Industrial Average fell from there and didn't recover to new highs until the mid-1990s, again, about 30 years later. And these are patterns that we see throughout the long sweep of history. Does this help convince you that the stock market is a great place for long-term investments, but only for long-term investments? I hope so. Food for thought, at least. Jim Cramer, the host of the CNBC show Mad Money and author of the books Real Money and Get Rich Carefully, asserts that the stock market is no place for money you will need in the next 5 years. But with a look at the long-term view that we've just taken, you could also make an argument for investing in the stock market with at least a decade time horizon. Now, none of this really matters to you if you have an investment time horizon measured in decades. You can weather the ups and downs. If you are gainfully employed and supremely confident of your job security, you may not need to concern yourself with any of this. However, those of you who are nearing retirement, working in a high-risk profession, or working in a low-income profession, you might want to take this long view to heart. You might also want to take heed of this lesson if you foresee major upcoming expenses in your life, like paying for education, making a down payment on a house, starting a family, facing major medical expenses, or if you plan to be indicted. I really hope that's not in your future. So, oh my God, what if you don't put all your money in the stock market? What do? Run for the hills? No, we're not doing that. Put it under a mattress? No, silly. No. There's a lot you can do. You can invest in bonds and bond funds. If you're already well diversified in your portfolio, you may already have enough high-quality bonds in your portfolio right now. So what do I mean by high-quality bonds? Well, you can get short-term U.S. government bonds, also known as U.S. Treasuries. You can also invest in investment-grade corporate bonds. That's debt issued by companies that are in excellent financial condition. So you can find index funds of both of these types I've just described at the large investment brokerage firms like Vanguard, Charles Schwab, and Fidelity, among others. So these bond index funds, they don't try to pick winners and losers in their category. They own the entire span of vehicles within that category. So they own a little bit of everything, and that's diversified, at least within that category. Beyond bonds, other short-term investment vehicles include savings accounts, as mentioned before. Right now, today, August 2019, you can earn 2.5% or thereabouts, although that seems likely to change over the next few years. You can also buy certificates of deposit, also called CDs. A great way to do that is to buy a laddered portfolio. Buy 1 year, 2 year, 3 year, 4 year, and 5 year CDs. And then when they become due, you just buy a 5 year, so they're constantly rolling over, and you have some coming due, one coming due each calendar year. Now again, I hope you hear that I'm not saying to sell all your investments and run for the hills. I'm just saying you might not want to hold money in the stock market that you're likely to need in the next 5-10 years. Anything beyond that, you're certainly able to participate in the stock market as long as you take that long-term perspective. So that's all for today. If any of this was helpful or thought-provoking, please click like, and certainly share this with the people that you look to for financial wisdom. In my next videos, I'll share with you what I consider the best personal finance resources anywhere today, both online and offline. So be sure to come back here next week. And lastly, again, a disclaimer. This material is offered for informational and educational purposes only. No part of this video constitutes personal financial or investment advice. I assume no liability for any losses arising from any financial or investment decisions taken based on the content provided here. For personal financial advice, again, always consult with your financial planner or your registered investment advisor. Well, that's it for today, folks. Thank you again for watching, and I'll see you next time.